Welcome back to the DG5 on April 22nd, 2025. And a little bit of the logistics here. I'm in Hawaii, and for various reasons, I don't get a chance to sit down in front of the computer after the close and look at things before the market opens again. So it's usually about a 3-hour lag. And is the volatility we've seen this last couple of weeks, and again today. So I didn't get to see what happened until the market opens, and now we've seen gaps everywhere. And it makes it very hard to pick out something that is going to be useful for you. You know, as luck would have it, I kicked this thing off on Sunday night before things got wild on Monday, and here we are on Tuesday. They're wild in the other direction. And that's just the nature of the beast we're dealing with right now. So I've got a couple of markets to look at, and you know, this is an update. It's about 9:30 p.m. on the East Coast time, and you know, it may be one of those days where you just sit on your hands, and you'll probably hear me say this over if you've been watching me or been on some of our webinars. You know, sometimes the best trade I make is the trade that I don't make, and maybe this is just one of those days you get to see the market do what markets do without being caught up in it, and you know, live vicariously through the hopes and dreams of other people. First up, let me go over what happened with Sunday's call, which was for us to short the gold market. And we're looking for a range somewhere around here. And it never slowed down as it passed through that target area to enter and go short. So if you are monitoring this market on this lower time period, this is hourly chart, there would have never been any reason to get short in that market. This is using the Holy Grail software, and same thing. There was just never any slowdown going through the target area for a short. And I guess, you know, looking at it now, I was a day early. Things have changed drastically in gold, and I was just a little bit early on that one. So now let's take a look at gold today, and we can see how price got up here to a daily 5.9, and also on the weekly chart and on the monthly chart, there was a monthly 5.9 down and a weekly 5.1, 5.2 combination that held. So that's that cluster of resistance the market ran into. I thought, I was anticipating that we get a little PL dot refresh yesterday and then push higher into that cluster. So for today, you know, we've gapped down from here, opened down just at the PL dot, and went all the way down here and found some support at the weekly envelope top. And what do we see next? Well, right now it's holding at the PL dot. It's a 5.3 sell, and it comes from these lines here, that Drummond line there. So the 5.3 sell in there is a target area for this market to peter out, or maybe a little bit higher to fill the gap. I guess something I should be pointing out here is this data window over here is all the information contained on the current bar. And you can read everything here, the envelope bottom and top for the daily. You can see what the value of this dot is, what the value of the PL dot is. I don't have the higher time period envelope information on there. So that's where I'm getting those numbers from. So for instance, this is a 5.1 up that is drawn from the lows of the two previous bars, and that is. And lastly, the S&P, we have a 5.2. That would have been a 5.2 down, and market's gapped up above that, and we're in the area of the oncoming now. Not making any call in this market. You know, this move down, yes, on Monday, the recovery on Tuesday, today, and then Wednesday, we've gapped up well above the envelope top, above any resistance, so be standing aside on this market. Again, you can see the values for these dots, the envelope, the PL dot, all of that over here in the data window. If you have any questions, please let me know, and hopefully we'll get some fluidity back in the market and make things a little bit easier. Have a good trading day, and we'll see you next time.